Okay, let's work. All right, this is going to be a series on market structure, median lines, and mapping our markets. I want to get a handle on some of the language we use and some of the definitions. Um, Basically, we have price flow here, and what we're going to do is make distinctions within this price flow so that we can frame it up, so that we can read it. We're going to make distinctions in its process, and we're just going to cut it up so we have the ability to frame and map a market. Now, I'm not doing a method here, and I'm not doing any setups here. This is purely instructional so we can get a handle on some of the mechanics. And by the time we're done, you should be able to understand any map or chart or post that I do. You'll be able to take it apart. So we're going to start from the beginning. And again, this is about making distinctions in this flow so that we have the ability to read and see what price is communicating to us, putting a map around it rather than averaging it out or using some magic. We want to read price. This is the language of price. All right, so you've seen other videos where the basic definition of a confirmed swing is a new low confirms a swing high and a new high confirms a swing low. That's basically you make a new high and we have a confirmed swing low here. Now, once we get the definitions, we need to also go past the definitions and understand there's real buyers and sellers here, real supply and demand, right? Price lifts, it takes out these sellers. Buyers were willing to buy it, and that confirms a swing low. But let's back up a little bit, okay? So before a swing low gets confirmed, it starts out as a swing. So let's just talk about the basic definition of a swing, because a lot of times the language gets sort of mixed up. So the definition of a swing or a pivot, to oscillate around something, and I'm going to say we need a minimum of 3 bars, right? This is standard technical analysis. It's been done, right? It's swinging. And so anytime price swings, it's a swing, it's a pivot, it's a swing, it's a pivot. There's a million of them on the board. We need to make a distinction here so we know what we're doing, what we're drawing, what we're measuring, no matter if we're using median lines or Fibonacci or whatever it is you want to use. We want to know what we're measuring. So there's lots of swings. So over here, you can see this is a swing all by itself. It's swinging. This is a swing. It's swinging. It's oscillating around. It's like a door hinge. Okay? And we're going to define it basically. We're going to say you need a minimum of 3 bars. So bar 1, bar 2, bar 3, all right, so before we can get to confirmed, it has to be a swing. And so you see, we're swinging around bar 2 here. Same thing here, 1, 2, 3. We break this, all right? So life starts out as a swing. So we have a swing, we have a swing. And then when we break the low, we will call it a confirmed swing. So this swing that was just a swing is now confirmed by breaking the low. and this will be a confirmed swing high. All right, remember, we're just doing language and definitions here. All right, so let's cut this up into some finer pieces so we can understand what we're working with at any time. Because when I'm trading, I know what swing I'm trading, I know what swing I'm measuring, I know which leg. So the next definition we want to use is just standard technical analysis. So let's call this swing that goes past the high. Let's call this, it's a leg, okay? So let's call this the impulse leg. And if you have other language, use your language, just be consistent with it. See, it's impulsive, it takes out the high. Or on this one, I'm doing both down and up. So this would be the impulse leg. All right. Now just from the language, see I'm using legs, right? You can see we're working in process. So this will be a reaction leg. It's the reaction after the impulse. That's all. And this would be the reaction leg up because price is going down. So the impulse leg takes out the lower the high, and the reaction leg is the pullback basically. Now, since I'm speaking in legs, I'm speaking in process. So the next thing we want to understand is what happens when these legs finish doing their thing, okay? So we're going to talk about a cycle. So the definition of a cycle is real simple. It's just a repeating series of events. Don't get all mystical about it. A cycle is just one cycle around. You're riding a bicycle. You're at the top of the pedal. You're at the bottom of the pedal. It's a half a cycle. You come back up. You've made a complete circle. This has to do with median lines, by the way. Okay. So we can call this a half a cycle and call this a half a cycle. So now we went further and called this a complete swing cycle. It's just a wave, right? It's just a wave. Same thing here. See, this is what the median lines do. So the cycle is complete. So that's a swing cycle. We're just trying to get our language together and get a handle on things without building it into a system. All right, we want the ability to read the flow, and so we're going to try to clarify this as best we can. It will never be perfect, but we're going to try. So a swing cycle is it's just a wave, and the reason I'm interested in swing cycles is because they're inherent in anything you can chart. Doesn't matter. You're charting the weather, right? We're charting buyers and sellers here. That's what we're doing. We're charting the flow of buyers and sellers. So anything you can chart will move in these waves. It will have extreme, extreme, and middle, center, median. You can chart how many times somebody walks by your house in an hour, and it will move in waves. We can go to 1909 and chart the Dow. It will move in the same waves as today's tick chart on oil. Doesn't matter. And so now we understand the cycle goes through a process here, right? It's born as a swing. Swing can then be confirmed. It can complete a cycle. It's just a wave. It's just things move in waves. Everything moves. The sound, it's moving in waves. Nothing complicated here. All right, so far we have a swing is born, right? A swing is born. When that swing later on takes out a lower high, we'll confirm the swing, right? And then we'll complete a cycle. The next thing we need to talk about, or define, and we'll eventually go to the chart and do this and apply median lines, and I'll even walk you through a trade that a student did on there so we can make it practical. All right, relative, relationship. We're going to put everything in categories, okay? And we're going to put them in the category of major, minor, and bar level. Now I'm going to define major. We'll call this leg here. So if we want to understand our major confirmed swing on the board, okay, I'm going to use the reaction leg. I'm going to use, oh, I got this wrong, didn't I? See, it's a lot to keep up with. But after a while, with practice, you don't even think about it anymore. You just do it. But we need the training. Okay, so I'm going to call relative relationship. I want to see, I made red here and I made blue. I'm going to measure via the reaction leg. And so what I'm saying is that, see that reaction leg's about yay big? See that reaction leg is about yay big? So they're relative, they relate to each other. See this reaction leg, about yay big? This reaction leg, about yay big? They're relative, they relate to each other. So we're going to make another distinction in here. So we'll call this a major confirmed swing high, and we'll call this a minor confirmed swing high. Now look, they meet the same definition of a new low confirms a swing high. A new low confirms a swing high. We're just making a further distinction here, calling this minor and calling this major. See, we still have a swing, we still have a swing, we still have a swing, we still have a swing. We still have a confirmed swing, except now we're going to call it a minor confirmed swing high. And we're going to use the reaction leg as our form of measurement. And so they're still confirmed swings, just like these red up here are still confirmed, still a confirmed swing low. It's just going to be a minor confirmed swing low. So far so good. Now, I'm looking at the relationship of the reaction leg. We'll do impulse leg at some point, but I'm looking at the relationship of the reaction leg, and I want them to get somewhat close, not perfect, but you know, somewhat close. So they relate. So the blue animal relates to the blue animal, and the red animal relates to the red animal. This matters when we're measuring, no matter what you're measuring with. If I'm using a median line, right, I'm going to say, I'm using a median line on the blue. Or I can draw very precisely and use a median line on the red, like so. Or when I'm doing a trade, I can use a minor to work my way into them, but we'll talk about that. All right, first let's understand. Now, what I'm saying here is whatever amount of data is in your frame. Now, obviously, people have different frames. So if this is my frame, I'm going to look for the largest reaction leg and call that a major swing, right? And then the next largest will be the minor, and I'll pretty much ignore everything in between. So it really doesn't matter. If you were, say, looking at, I don't know, let's say, this is your frame. So in any frame you choose, there will be a major and there will be a minor. You just need the ability to structure this through time. So in any frame you choose, any amount of data, there will be a major and there will be a minor. So for instance, um, here I might look at this and say, okay, there's my reaction leg. It's about yay big. And I'll place it over here and I say, huh, all right, that's a smaller one here. And so this would be my minor. Now both of these meet the definition of a swing. This would be a major. If this was my frame, this would be a major confirmed swing high, and this would be a minor confirmed swing high. This would be the major reaction leg, and this would be the major impulse leg. This would be the minor reaction leg, and that would be the minor impulse leg. And you can even begin to see how major and minors start to flow together. See the cycle complete, or if you used a median line, right? You can see the cycle complete. But we'll get there. So no matter what amount of data you're using, there will be a major and there will be a minor. And we're going to use the reaction leg as a way to determine relative relationship. They relate to each other. Okay, let's do a quick recap. All right, quick recap. We have a swing. You basically need 3 bars for a swing, right? Bar 3 takes out bar 2. It's just a swing. It's just a pivot. Now, if price takes out a prior swing, we can now confirm this swing. So this swing grows up to be a confirmed swing. Then we have the impulse leg and the reaction leg of a cycle. And all things move in waves. And then we made a further distinction in these cycles. So these are cycles and these are cycles. We made a further distinction calling them major and minor. And we're going to use the reaction leg as a measurement. Now at bar level, even the bar level swings have the same definition. See, when I take out a low, or when I take out a high, it becomes a confirmed swing low, confirmed swing low, and then boom, confirmed swing high, confirmed swing high, confirmed swing high. So that's bar level. That's bar level swings. Now, I'll leave a reference chart up for you guys to look at and study and take apart and agree or disagree with, but it's just language and definition. Remember, the point of this is to be able to take this flow and begin to put a map around it. So in the next video, we'll actually do these definitions using this Aussie 45-minute here, back just before April or into April. And I'll walk you into a trade and how it was accomplished. So this is a lot different than, oh, here's the setup. So the setup's no good if you don't understand. We want the ability to read flow to make these distinctions in flow to see what price is communicating to us, to put a frame around a market. This is what market structure is. We're structuring a market. It's not mystical. It's not fancy. It's not a setup. We're just putting a frame so we can understand what's going on and don't lose sight that these are actual buyers and sellers. We're trying to understand what the buyer, we're mapping the buyers and sellers so we can understand what they're communicating to us. It's not just technical patterns. So we'll come back to this in the next video and put some median lines and define some of this. In the meantime, you can take a look at it, see if you can find the major swing and the minor swing as defined here.